It's time to look at the kind of activity playing out in the Forex space now, and joining us for that conversation, Jameel Ahmad, who's Vice President of Corporate Development and Market Research at FXTM. Thanks so much, Jameel, for your time this evening, and thank goodness you're joining us in studio and not on the line this evening. Let's take a look at all that's playing out on the currency scene at the moment, starting off with the dollar, I guess, because we've had the dollar index sinking, erasing all of the gains that were inspired by Trump's business-friendly stance since his November election victory. Are you surprised at the extent to which political news is dominating the kind of moves we're seeing on currencies right now?
Firstly, thank you very much for having me. Completely right. Yes, political risk used to be something that investors would associate with emerging market economies. But over the past year, this has switched somewhat. We had the Brexit just under 1 year ago, then the US elections, and then we've had several elections scheduled throughout Europe over the past couple of months. And what I'm seeing as a theme, actually, is investors are beaten to the drum of political risk. And in the developed markets, which is something that's completely new, investors are ignoring macro data. They're moving to Trump. Trump as a whole is dominating news headlines, and this is something that's very unlikely to change. And of course, we've seen quite significant volatility over the previous 24, 48 hours based on headlines that are coming in from Trump. Dollar's weakening is looking very positive for emerging market currencies, but global currencies as a whole are gaining against the dollar.
Absolutely. Let's take a look, though, at the macros that we have to actually associate with the US market as a whole. What sense, or what's your assessment of the macros currently at play, and should investors be paying more attention to that side of things?
Definitely. Macro data you should never really ignore, because it's a true theme of how your economy is developing, performing in this case. US economic data, it's still relatively robust and consistently strong. As a developed market, the US is still very high in front of the pack. Federal Reserve still raising interest rates higher. They seem to be maintaining their bias towards higher interest rates. The Trump administration have had no impact on US economic data. It's far too early to tell, and of course, Trump policies have not even come to function yet. If they do even push the line with Trump administration policies, Europe is very much impressing. That's definitely slipping underneath the radar. Euro looks undervalued, in my opinion. And of course, with UK economic data, we've got Brexit, ongoing uncertainty. Investors are even ignoring the UK economic data to some extent.
Let's take a look at the euro, because you highlight that it's, in your opinion, undervalued. It has hit its highest level since November the 7th. So how much more upside are you pricing in on that front?
Well, actually, what this comes down to me, in this near-term price action, is how much lower the dollar can slip. Because when the dollar slips lower, obviously it's positive for emerging market currencies, but as the correlation stands, the euro gains the most out of the major currencies with the Japanese yen. So if investors in this case, if they continue to price in further dollar weakness, it's very positive to the euro. But I'm bullish on the currency over the medium and the longer term. Economic data from Europe has impressed throughout this year. GDP growth looks pretty strong at this point. Let's hope it's consistent, because we've said this about Europe before. It looks like inflation data is also picking up. I do not believe there's any justification for the euro to be below 110 at this stage, and it's actually moved higher over the past 1 or 2 days. But I believe until this end of this year, if economic data from Europe continues to impress, and if we see literally no progress when it comes to Trump policies, euro could head towards 115, maybe even higher.
Yeah. Well, what are the implications then for the pound? Because, of course, you've talked the euro, but we've got Brexit to consider, that a 2-year-long process, and that bringing a whole level of uncertainty into the equation. Election risk needing to be factored in as well. And one's got to ask the question whether investors are necessarily on the right side of this.
Another election in the UK, what can I say? I think that Brexit will drag out, and it's going to continue dragging for 2 years. There's going to be a lot of uncertainty there. Will Britain retain single access to the EU market? Will they be able to get a good trade deal out of Europe? I'm unsure at this stage, and I think many others are as well. But let's talk about the election next month. Pound is still towards 130. And unless the dollar continues to weaken, I believe that the pound is overvalued at this point, because election casts big risk to investors. At the moment, the markets are severely underpricing the risk that Theresa May, the current UK Prime Minister, might not win the election. I believe that the pound should be trading lower, to be honest with you.
You highlight unable to get a good deal moving forward, and that's what you're pricing into the equation. Why is that so? Is that because European data has been coming through a lot stronger than many had anticipated, and with it turning the corner, potentially boasting a whole lot more muscle when it comes to negotiations?
Now, that's a very good point to make, and I find it very interesting. With economic data from Europe improving and seeming to be progressing, to be honest with you, there's an argument to say here that Europe might not need the United Kingdom as much as the United Kingdom needs Europe in terms of single passport access and access to Europe. I believe that as long as economic data from Europe continues to improve, and it looks like populism has been defeated in Europe at this point, which means there might not be any more risks of European nations threatening another Brexit or whatever we're going to call it these days. Of course, we've got German elections in September. That'll be a risk in a couple of months. But maybe, just maybe, Europe does not need the UK as much at this point as maybe the UK would have thought. And I do believe that UK Prime Minister Theresa May, if she's still Prime Minister in 1 month's time, is going to have a tough negotiation period with the European Union.
So, Jameel, having unpacked then some of the global scenario, what are the implications as you see it for emerging market currencies? Because they've been standing as benefactors, and I guess here in South Africa, the surprise more so that the rand has been enjoying that upside as well, simply because global factors are dominating more so than some of the political and local issues, or the political issues that are currently at play locally.
Well, listen, I still think emerging market currencies as a whole are deeply undervalued. They were oversold at the end of last year based on these Trump protectionist policies. Trump's going to encourage a stronger dollar, and this is why emerging market currencies slumped. Obviously, near-term price action, dollar's weakening, very beneficial for South African currency and emerging market currencies as a whole. I do believe that these economies are still playing out relatively well in terms of consistent data, and that there hasn't been that much of an economic impact based on Trump. So I do believe that emerging market currencies are undervalued. I believe the rand still has so much to gain as well. Let's see how this plays out, because if the dollar does continue to sink, these currencies are going to become very bullish, which means very positive.
How much risk, though, does another credit rating downgrade coming to the fore for South Africa in particular, and that from Moody's, of course, bring into this equation for you?
Well, look, this is my opinion, that the rand itself, when it comes to credit downgrades, doesn't mean that much. It encourages some near-term price action, but over the medium and longer term, it plays out. The main risk with this would be in the equity markets and maybe banking stocks. But let's talk about the rand a little bit more. I think it's still oversold. I do believe that as long as the dollar continues to slip, the rand's going to be positive, and it's looking very undervalued at this point. And let's not forget, South Africa benefits from a high interest rate policy. So investors do believe that they want to encourage the carry trade opportunity. South Africa will gain a lot.
Do you still feel that a higher interest rate policy and that carry trade appeal holds as much weight as it did in the current environment, where we've just got so much political uncertainty weighing on our economic prospects from here on out?
Now, that's interesting, but I do believe it does, and I'll tell you why. Many emerging market central banks over the past 18 months have had to cut interest rate policy, which means that interest rates are no longer so high. In retrospect, South Africa is still very close to 10% at this point in time. And that's why I believe that if Bank of England threatens to cut interest rates or keep monetary policy low because of Brexit, if ECB, European Central Bank, say that QE needs to continue, that European banks will maintain low, and if the Federal Reserve do say, okay, we're going to leave US interest rates unchanged for some time, this means South Africa will benefit.
Well, let's leave it there, Jameel. Thanks so much for having joined us in studio this evening. Of course, Jameel Ahmad is Vice President of Corporate Development and Market Research at Forex Time.